Today's topic, the simple financial plan in 9 steps. So we're going to try to give you 9 good takeaways to building that strong financial foundation. Some of them will be items to implement, some of them will be items to keep in mind as you move forward. So whether you are a do-it-yourselfer, whether you work with a financial planner, or whether you're wondering, what items can a financial planner help me with, we're going to cover that in all 9 steps here. So that's all coming up next. Stay tuned. All right, the first topic is tracking your cash flow and budgeting. We know budgeting is not everyone's favorite word, but truthfully, I think the key to every person's financial plan or just even their financial literacy comes back to cash flow, knowing what comes in, knowing what goes out. And keep in mind, I think people get worried that budgeting is this forever task. And often what we see is when you do get in the habit of tracking very good, when you get very good at tracking your cash flow and your income and outflows, or inflows and outflows is how I usually describe them in a financial plan, is that you're going to get good at it, right? You're going to know where your money's going, and eventually you probably are okay to stop, and then maybe you got to revamp it every now and then. So don't get too hung up on the word budgeting, but it's vital. It's vital to know what money's coming in, what money's going out. Tell your money where to go at the top of your budget, so you're not worried about the bottom part of your budget. So first step for all financial plans, whether you're doing this on your own, whether this is your first financial video of all time, or whether you're working with a financial planner, you should always understand your cash flow. So that's step 1. All right, the second step is pay your credit cards off in full every month. I know. Finance 101, yes, we know that, Chad. This is not breaking news. Or yes, I understand that, but it's too hard to do because of whatever reason. So there's two ways to think through this, and I understand the human side of things too. So personal finance is always more personal than it is finance, but ultimately a good financial habit, a good strong financial plan, will have you in the habit of paying off your credit cards every single month. Plus, we know interest rates are probably not low. Even with some of the highest credit scores, you're probably still 10% or more. So just try to get in the habit of paying those credit cards off every month. If you continually see yourself having to pay off credit card debt, see if there's an underlying issue. See if there is some type of overspending. Is there a way for you to add to the income side? So the beauty, the blessing and the curse of finances are numbers don't lie. So if it's truly maybe the income number, is there a way for you to increase that number, whether it's with your current job or a side gig? So part 2 here, the second step is making sure you're paying your credit cards off every month, but also understanding, I know that can be difficult depending on what's going on in the world and what's going on in your personal life. But if you continually see them building or not getting paid down properly, maybe also dig a little bit deeper to see if there is something underlying there, or if there's anything else you can do to improve the odds of getting that habit of paying it off every single month. Step 3, funding your emergency fund or financing your emergency fund. I kind of don't like the term financing. That kind of sounds like we're taking out money to fund our emergency fund, but let's just say funding your emergency fund. So I could have led with this one. I am a huge fan of the emergency fund. I believe that cash provides not only a backup source for rainy days, emergencies, but it also has a psychological effect. Seeing that number can just send positive vibes to your body, and also kind of get you in that habit of building those good financial habits going forward. So there's many different ways you can look at emergency funds. The number for your emergency fund is going to vary from one house to the next. Sometimes we say, hey, let's start with baby steps. Let's hit 1,000 and then go to 2,000. If you're higher income, then maybe we say, hey, our ultimate goal is 10,000 or 20,000, or maybe it's 6 times your income, or 6 months your income, 6 times monthly expenses as well. So whether it's 6 months of income or 6 months of expenses, this number can vary. And I think we stole this one from one of the sleep commercials, but what's your sleep number? Some individuals like to have a lot of cash. It's important to them. They like that. Others don't see that big of a need. They're okay keeping a lower amount, but everything else is financially strong. So understand your sleep number to, talk through that, whether it's with yourself or with your significant other, and just say, hey, what is the number we like to see in that emergency fund or rainy day fund? But moral of the story, get that emergency fund funded, whether it's just getting started or it's fully funded. Make sure that's on your to-do list and high up there as well. All right, number 4 is long-term disability insurance. You may have heard of the term, you may have not. You may have seen it in your open enrollment packet, but you never heard about it ever again. We work with physicians a lot, so usually it's a higher buzzword only because of they're really taught more about this while they're in training, or they've heard their colleagues talk about it. But disability insurance, especially for younger professionals, Gen X and Gen Y, where we still have a long working career ahead of us. Sometimes we don't think of it this way, but our biggest asset is the ability to wake up and go to work every day. So that's why long-term disability insurance is very important. So just understand your coverage, understand if you need to get more coverage. Usually it looks something like this. You probably have some form of coverage through your employer. Usually employer plans, because they're a group plan, they can be strong, but usually they're not the strongest definitions of the underlying policy that we look into. So maybe you need a supplement with a private policy. So just understand what disability you have, disability insurance, see if you need to supplement that with any other insurance as well. But step 4 here is just understanding that you do have disability insurance in place or you don't, and then you need to get it added. But very vital, because again, our biggest asset, even though we don't think of it that way, is just the ability to wake up and go to work every day. All right, number 5, sticking with the insurance side of things, term life insurance. Term life insurance, the number is going to vary again from household to household. If you're single and no one's relying on your income, maybe we don't even worry about this topic yet. You'll have some individuals say, hey, lock in insurance while you're young and healthy. I get it, I understand that side of it, but for the most part, if someone's relying on your income, this is vital. Term life insurance, for the most part, is relatively inexpensive too. And maybe you have some coverage through work. So again, see if you have any group life insurance, but then think through that number, right? Is it enough to replace your income for a period of time if someone's reliant on your income? Is it to help your kids go to college? Can it help your significant other get through that tough time? Talk through those numbers. What should be included in that number? Are we paying off mortgage? Are we sending 4 kids to Yale? Whatever the example is, those are numbers that we want to start to say, all right, well, if we add that, we add this, we add that. All right, well, we need X amount and I only have Y amount. What changes should we make there? So 2 things to always look at. What group coverage do you have in place? Traditionally, if it's free group coverage, take advantage of it. If you have to buy that, which usually is called supplemental group insurance, just see what the premium is. Usually if you're in very good health or just average or better health, you might actually do better in the private market, depending on the size of the group plan. If you have average or lesser health, you might do better getting the group plan. So just get a few options, right? See what the numbers are from your employer plan, see what they are on the private side. Private side, portable, more benefits to it, but sometimes you just keep an eye on the premiums. For the most part, term insurance, as long as it's a financially secure insurance company, it really does become more of a price shopping thing. And then there's 10 years and 20 years and 30-year terms. So also keep an eye on all those things. But term life insurance, step 5 here. Do you need it? Do you need more of it? Okay, let's talk through that and make sure that you have the proper coverage in place there. So number 5, term life insurance. All right, number 6, maximizing your retirement plans through work. So the next 2 here are going to be numbers related for savings. So step 1 is, if your employer is offering a match, always try to get that full match. So if your 401k plan says, hey, we will match 50% up to 6% of your salary if you're saving that 6%, make sure you're putting in 6%. That's 3% free money. That's literally a bonus every single year. So don't leave free money on the table. So that's the first place that we'd start. Now, we kind of have our own buckets that we go through, but again, it's going to vary from household to household. But see if you're getting a match. If you have high income, if you're a high income household, you should be maxing out your 401k, your 403b. Not only is it good for your long-term savings, but it also helps from a tax perspective in that tax-deferred number, assuming that we're using pre-tax dollars here. We're not messing around with any Roths at this point. So number 6, make sure you're taking advantage of and trying to max out your employer retirement plans. All right, number 7 is building on that topic of saving, but maxing out all your tax advantage savings accounts. So maxing out your retirement plan through work. That's what we just covered in number 6. Number 7 would be taking that to the next level. If your income is lower, you may still have the option to take advantage of a traditional IRA. Now, there's a lot of variables here. It's not as simple as saying, hey, you can do it. It really does depend on if you have a 401k plan and then what's your income. So there's some moving parts there. But let's just say you are a high income household, which is predominantly the individuals that we talk with our Gen X, Gen Y physician niche. But next step would be backdoor Roth IRA. So you're maxing out your 401k or your 403b. Next up, do a backdoor Roth IRA. If you're not familiar with that term, just do a Google search. Make sure you're doing all the steps properly. If you're a fan of Dr. Dolly, the White Coat Investor, or Leaf, the Physician on Fire, these are all things that they talk about quite a bit. They give you great tutorials on their website, so go check those out. But if you're maxing out your employer plan, next step would be, is there other tax advantaged options? For the most part, we always check out backdoor Roth IRAs. So that would be number 7 on our list. Is there any other tax advantaged savings accounts that you can take advantage of? All right, number 8. So third bucket we'd hit here. You max out your retirement plan at work. You're maxing out your backdoor Roth IRA. Now what? Where do we go next? This is where we look to what we call a taxable account. So whether it's an individual account or a joint account with you and your significant other, that's the next spot to go to. So we call this our overflow bucket, right? You're maxing out everything else. But this account, the taxable account, really controls a lot of those other goals, right? For the most part, again, high income physician households that we work with, step 1 and step 2, which is retirement plan, backdoor Roth IRAs, we try to get that on autopilot. We try to have every house do that without even thinking about it. So then comes, all right, well, what's next? Do we want to go for early financial independence? Do we want to have, extra money set aside for a vacation home 20 years from now? That is where this joint account becomes vital, or I should say joint account, but I should say taxable account, which can take the form, again, of an individual account or a joint account. But this is the account where you overflow. This is where you can really load it up with that extra savings. No limits on how much you can put into it. So number 8 on our list of 9 steps here is, once you've done the other 2, and maybe you even put this somewhere in the middle, depending on where your goals are, right? This can change a little bit. That taxable account should definitely be on your radar and at least start kicking the tires on, does that make sense for you and your family? Last but not least, number 9, debt game plan. You could make the argument that this should also be number 1. But just as we kind of walk through all the steps there, these 9 aren't in, hey, focus on this one first. These are just 9 steps that you really want to have in that financial plan or that financial foundation that you're working on. And number 9 says, hey, let's have a debt game plan. And this can take many forms, right? So again, Gen X, Gen Y physicians, student loans are a big part of a lot of the initial analysis and a lot of the initial game plan. Big part of the cash flow early on. Even if you're going for public service loan forgiveness, it's a big number that we got to look at. Now, the nice part about public service loan forgiveness is usually it's much smaller than paying them off aggressively in the private world. But whether you're going for PSLF, whether you're going for aggressive payoff in the private world, whether you have credit card debt, if you build up some credit card debt while you're going through your training just to help with living expenses, this is where we just want to get things organized and make sure you're on track to get them paid off. I always say 10 years at the longest, 5 years is more ideal. Obviously, the balance is going to make a huge difference here, but make sure you have a debt game plan in place and stick to it. Get a plan in place where you're comfortable with, and if you have that extra bonus or you do some extra call shifts and you get some extra income that month, throw it towards those loans if it makes sense for your plan. Pay off some of that debt, whether, again, credit card debt, student loans if they're private, if they're PSLF, stick to the plan. So number 9, debt game plan, get it in place, stick to it, be more aggressive where you can. And that's number 9. There you have it. It's as simple as that. 9 steps to a simple financial plan. And again, whether you're working with a financial planner, whether you're thinking about working with a financial planner, whether you're do-it-yourself, or whether this is your first financial literacy video of all time, these are 9 topics that you should at least have an idea of how they work. Are they incorporated in your plan? Or even, you could even argue 9 to-dos. So hopefully you enjoyed all those steps. And walk through those and again, plug those in, make sure you have them, maybe put little check marks beside them. But that is the 9-step simple financial plan. This would be a great time also. If you like this video, we pump out a lot of good financial literacy videos like this. So don't forget to subscribe, click the little bell icon there. As always, thanks for tuning in, and we will catch you on the next video.